back to the Compliance Kitchen. This is Sylvia, and today let's take a look at a recent enforcement action. This is by FinCEN, or the Financial Crimes Enforcement Network. On August 10, they issued a release in regards to a $100 million civil money penalty against BitMEX. The release tells us that BitMEX is one of the oldest and largest convertible virtual currency derivatives exchanges, and the penalty was assessed for violations of the Bank Secrecy Act, or BSA, and FinCEN's implementing regulations. So in more detail, the release tells us that BitMEX operated as an unregistered futures commission merchant, or FCM, providing money transmission services, and allegedly willfully failed to comply with its obligations under the BSA, or the Bank Secrecy Act. FinCEN's action is part of a global settlement with the U.S. Commodity Futures Trading Commission, or CFTC. FinCEN's Deputy Director Anna Lou Tyrrell explained that BitMEX's rapid growth into one of the largest futures commission merchants offering convertible virtual currency derivatives without a commensurate anti-money laundering program put the U.S. financial system at meaningful risk. By way of background, BitMEX allowed customers to access its platform and conduct trading without appropriate customer due diligence. According to the FinCEN release, BitMEX only collected an email address and didn't verify the customer's identity. While BitMEX represented that its platform was not conducting business with U.S. persons, FinCEN found that BitMEX failed to screen for customers that use a VPN to circumvent Internet Protocol monitoring and thus still access the trading platform. So, according to the release, there were also instances where BitMEX's senior leadership altered U.S. customer information to hide the customer's location. The government tells us that these failures expose financial institutions to an increased risk of conducting transactions with money launderers and terrorist financiers, including non-compliant exchanges in jurisdictions that are high risk, ransomware attackers, and also darknet marketplaces. BitMEX conducted at least $209 million worth of transactions with known darknet markets or unregistered money service businesses providing mixing services, and failed to file a suspicious activity report, or SAR, on at least 588 specific suspicious transactions. The CFTC and BitMEX have separately agreed to a consent order requiring the payment of a civil money penalty with additional equitable relief. BitMEX will pay $80 million to FinCEN and the CFTC. $20 million will be suspended pending a successful completion of a historical analysis of BitMEX's transaction data, or so-called SAR lookback, and also independent consultant reviews. The reviews and testing will ensure that appropriate policies, procedures, and controls are in place to ensure that BitMEX is not operating wholly or in substantial part in the United States. So, as always, if you guys need to take a closer look at this, I have a link on the blog site on compliancekitchen.com to the actual FinCEN press release. And as always, thanks for stopping by in the Compliance Kitchen.